Hello everyone, how are you all doing? If you're new, please remember to subscribe and like the video. Without your support, I won't be able to do more videos as vital as this one. And today is no exception as we are discussing what Powell has stated. He stated that bank collapses are inevitable and might be attributed to losses in commercial real estate. Thus, what he's discussed is just so profoundly significant. Warren Buffett. Charlie Munger has even already discussed this. These guys have discussed a possibly extremely important issue with banks and real estate. But sadly, he passed away last year. Jerome Powell, the chair of the Federal Reserve, stated on Thursday as well. He anticipates that some banks will fail as a result of their exposure to the commercial real estate market, whose value has drastically decreased as a result of the move to remote labor. I've covered this topic in great detail in a few previous videos, namely in relation to real estate and the statements and actions of Warren Buffett. The reason that Warren Buffett's recent sale of his shares in the home building company D.R. Horton is significant is because he almost never sells all of his stock in a company in the same year that he purchased it. Someone like Warren Buffett exists. Who has said that the finest stocks are? The best investments are those that you make now and hold on to until Judgment Day, which means forever. Powell, Charlie Munger, and Warren Buffett, among others, have all indicated that there may be a serious issue with the market and with real estate in general. I was initially a little skeptical about this, but after hearing what Buffett had to say about it, along with those of Charlie Munger and Jerome Powell, the list has grown increasingly lengthy. It's really troubling to even consider that. There could be an issue in the near future. We're talking about 2024 or possibly 2025. There is no indication of when exactly this will occur, but to be honest, I'm worried that there might be a major problem. Now that Jerome Powell is discussing this, I'm thinking that I needed to take a moment to reflect because it seems like something is going to happen, and that you should potentially prepare yourself because things could get bad out there. Hence, this was his statement. Powell stated that the banks experiencing issues with declining office space and retail assets are not the large banks that were deemed systematically important following the 2008 financial crisis. The event that led to the financial sector's taxpayer bailout was also precipitated by unsound real estate assets. Instead, the failing banks are now recognized as smaller and medium-sized institutions. We will continue to work on this issue for years to come. Powell's exact comment, "There will be bank failures," is what worries me when he says straight out. Powell has stated unequivocally that bank failures will occur, which is terrible to hear. There will be bank failures if you are active in the economy in any capacity. Economic activity is like nails on a chalkboard and is the exact opposite of melody to your ears. He stated on Thursday before a Senate Banking Committee hearing on the Federal Reserve's monetary policy. We're working with the smaller and medium-sized banks to resolve these issues, so it's not a first-order problem for any of the larger banks. In my opinion, the issue is manageable. He stated, "Of course, what politicians do what you know anybody really within Washington. What they do is try to gently introduce concepts and issues that are happening in Washington, D.C., or the economy in general. They might say something or other that doesn't want to create too much of a stir or worry. There are a lot of small and medium-sized banks out there. Not every single bank is like a Chase or a Key, even if he claims that the issue is limited to smaller and medium-sized banks. That is still a blatant sign of a serious problem." Powell stated that he had identified the banks most at risk, but he did not elaborate on the specific regulatory actions concerning commercial real estate exposure that are currently being carried out by the Fed, which is the federal currency issuer, as well as one of the main bank supervising agencies. In our conversation, he asks, "Do you have the arms around this problem? And do you have enough capital? Do you have enough liquidity? Do you have a plan you're going to take losses here? Are you being truthful with yourself and your owners?" He is referring to the Commercial Real Estate Investment Trust, or REITs, that these banks own. Have suffered during the last few months. This may already be happening under our noses because commercial real estate investment trusts like Alexandria Real Estate Equities, Properties Killoy Realty Group, and Vornado Realty Trust have all been in negative territory since the year's beginning. As it is stated here, these trusts have already seen some setbacks this year alone. Thus, Powell explained how distant labor has led to a decrease in the value of actual commercial real estate. Thus, it's similar to what happened during the pandemic in that individuals stayed at home. Rather of truly going to work and making purchases, they would prefer to work from home. For example, let's take the case of an office or perhaps renting out a store or something similar. This is what is clearly meant by commercial real estate, or at least some of it, when he talks about various forms of it. In many cities, there are a lot of empty buildings due to remote work. The downtown office district is extremely underpopulated, and so on. Some, fortunately, are being converted, such as the Woolworth building, if I may add. It was converted from being a fully functional office building to half an apartment building, with the remaining half being a combination of office and residential space. We're talking about enormous buildings in downtown districts that are empty, and that's a problem. It also means that all the retail establishments that were there to serve the thousands of people who work in those buildings are under pressure, he said, while the decline in commercial real estate values could force some banks out of business. So there is some room to kind of convert some of these buildings, but it's still a huge problem. Powell expressed assurance that the banking regulators and the Federal Reserve will be able to control the fallout and avert a more serious crisis. The Federal Deposit Insurance Corp, FDIC, which guarantees deposits in and regulates banks, reports that 34 U.S. banks have failed since 2015. If you recall, Silicon Valley Bank was a huge story last year. The Fed and Treasury Department also sprang into action last year to bail out Silicon Valley Bank and Signature Bank. Thus, this is actually occurring. This is something that really should be on everyone's mind once more. It doesn't really matter if you invest in individual equities, mutual funds, or exchange-traded funds. You just know that if something similar is happening, something has to be going on that you know about, because the economy is not 100% immune to these kinds of things happening. The Fed and Treasury Department also jumped into action last year to bail out Silicon Bank. If you lived through the 2008 crisis and recession, then I'm sure you know that you always have to be mindful of anything that could really hinder the economy in any way, as they'd pose a threat to public trust in the financial system. Silicon Valley Bank, Signature Bank, and other troublesome banks provide lifelines to other banks. Thus, please remember to leave your thoughts in the comments section. I genuinely want to know what everyone has to say. In conclusion, Jerome Powell's sobering announcement about the potential collapse of banks serves as a stark reminder of the fragility within the financial system. The delicate balance between economic stability and unforeseen challenges highlights the need for proactive measures and stringent regulatory frameworks. As policymakers and financial institutions navigate these uncertain waters, the importance of transparency, risk management, and collaboration cannot be overstated. Powell's warning underscores the imperative for collective efforts to strengthen the resilience of the global banking sector, fostering a more robust and secure foundation for the intricate web of financial interactions that underpin the world economy. As the public absorbs Powell's cautionary words, it is essential for individuals, businesses, and governments to remain vigilant and informed. In the face of potential challenges, adaptability and strategic planning become crucial tools for navigating the evolving financial landscape. While the specter of bank collapse is unsettling, it also serves as a call to action for comprehensive reforms and systemic improvements. By fostering an environment of accountability, innovation, and international cooperation, stakeholders can work towards building a financial system that is not only resilient, but also capable of withstanding unforeseen shocks, thereby fostering long-term stability and prosperity. When the Fed's policymakers convene again on March 19 to 20, it is almost unanimously anticipated that they will maintain the policy rate at the current range of 5.25 to 5.5%, where it has remained since last July. Powell stated this week that the range is probably the peak and that the pressure on prices is going to decrease. Policymakers are waiting for more evidence that inflation is steadily declining before deciding to lower interest rates because at 2.4%, it is still above the Fed's 2% objective. And once more, don't forget to subscribe. I truly hope that just by discussing this, I've earned your subscription today. I think that discussing Powell and all of the other topics we cover on this channel, commercial real estate, businesses, the economy, and real estate in general, is a very important conversation to have. Thank you again for watching, and hopefully I'll see you in the next video. We strive to create every single video on this channel with content that will still be relevant in a century.